Hey, welcome everybody. My name is Mark Dannenberg. This is the Options Moneymaker question and answer session. Today is October 7th, 2020. It's 7 p.m. We are ready to answer whatever questions you may have. Aaron Rumley is here with me along with Michael Kastner, and you'll be hearing from them just shortly as we get into the Q&A. If you're brand new to the Q&A, you're new to our community of traders, we are all about a mantra of learn to trade and trade to earn. Learn to trade and trade to earn. We are open to discussing anything that we do in the live trading room, in our programs and our education programs and the tools that we provide. We'd like to help you understand more about them. We realize that if you are early on in your education, whether you're learning options or you're learning futures, that there are always questions that come up. And there may not be a good way for you to present that question to us unless we set aside some time to devote specifically to you and being able to respond to those questions. If we talk about the adaptive entry system for identifying trends, that's fantastic. We could talk about the profit sweet spot matrix, where we track the daily cycle finder plus crosses. Live trading room is for real-time trading and support. We are there all day long, Michael, Aaron, and myself, some combination of the three of us. And we address a lot of questions in the room, which is just a fantastic opportunity for any trader who really wants to immerse themselves in learning their trading. You don't have to be there all day, but you can participate for whatever period of time you have available in your schedule. We also could talk about the Profit Builder Plus options education program, fantastic options education program. If you're interested in really learning options trading from the ground up. Futures trading education for learning the risk and reward of futures. It's funny, as I rewind many, many years ago, I had so many people telling me that futures by themselves are just so risky, stay away from them. But as I moved forward through learning them myself and then starting to teach others how to use them, it dawned on me that that opinion was more about a lack of information, a lack of knowledge, not at all about an understanding of what can be done with them. So we trade them very actively in our live trading room. We love trading futures, and we hear from our traders in our community that they do quite well with futures. But we can provide an education as well as ongoing support in the live trading room. New Cycle Trading is our collaborator in most everything we do these days, particularly the adaptive entry system for providing market metrics. Craig from New Cycle Trading is just an avid partner of ours, and you will hear him frequently in our live trading room throughout the day. There's a forum on the New Cycle Trading website. If you want to go visit newcycletrading.com, you can browse around in there. There's a bunch of information that's quite important, I think, for traders there. So I have a very, very important message. Now, if you've been here before, you know this is not new. It's not a new message, but it is vitally important. I think that every one of you who is committed to trading should look at yourself as a small business owner. And as a small business owner, there are certain things that you need to do. You need to be educated in what product or service or business you're in, and in your case, you're in the business of trading, engaging with the markets, and your engagement with those markets is designed and intended to produce a positive result, more money in your pocket. That's the important outcome that you desire. There's a particular tool that once you've traded and used the adaptive entry system and produced your profits for the day, and after you've kind of learned what you're doing and you feel comfortable and confident with what you're doing, there is a vitally important tool that every one of you needs to have and should use every single day, and it takes just a few minutes at the end of each trading day. That's the personal trading plan. Personal trading plan is going to help you build and understand what your financial forecast is for a 12-month period. Now you can extend it out for as far as you want, but we start with a 52-week plan for basically forecasting what your income is likely to be, could be, based on your current trading patterns, based on your current production of profits. So we normally at the end of every trading day in the live trading room, we go through and we update our personal trading plan. So today I did not do that right at the close of the market, and I'm going to do it here as we get started with this Q&A. If you have questions that are developing in your thought, please put them in the chat and we'll come to those just as soon as I update the personal trading plan that we've been tracking now for over 13 weeks at the close of the live trading room every day. First of all, we use this tool. Kudos to Aaron for creating this tool for us that allows us to very easily track the detail in real time of every single trade that we take in the live trading room. And we're using this as an example, folks. The adaptive entry system is very adaptive to anything you want to trade. If you want to trade futures, you want to trade options, you want to be a stock investor, and you want to know when the best time to get into the stock is or what get out of the stock is, we're happy to show you how to use the adaptive entry system. But what we do is we profile the NASDAQ 100 futures in our live trading room on a 5-minute chart. It allows us to provide a lot of activity generally to the room so that you can understand how to interpret the signals. And then if you decide you want to trade those same signals on options, or you want to trade those signals using the S&P 500 futures or the Russell 2000 futures, or oil or gas or whatever you choose to trade, the common denominator is the method at which you interpret the signals and engage with those signals to enter a position or exit a position. So when I demonstrate, show, and profile the NASDAQ 100, it's not intended to suggest that there's a limitation to only the NASDAQ 100. We just like trading it, and it's a great way for us in the live trading room to show you how to interpret what action to take on any given situation that may develop in the market. So we typically look at from 7 a.m. Eastern on. Here's the profile today. We traded up until 3:15 today. 3:15, these are Eastern times. And in the daily summary, we see that the two primary areas that we focus our attention, 9:30 to noon, taking all signals that the adaptive entry system offers, and 7 a.m. Eastern to 4 p.m. Eastern, trading only the trend bias and the trend continuation trades. And what we do then is we take those two categories and we assess their performance, their point production, profit production for today, and we plug those numbers into our personal trading plan to give us an idea of where our income could be, what our income could be over a 12-month period. So we can see here that today, in the 12 or the 9:30 to 12 category, we lost 38.25 points. So 38.25 points. It's a losing day today. Those happen, and we did 7 trades. And in the 7 to 4 category, we did 11.5 points, and we did 16 trades. So a little more sluggish today when I was looking at the market. I was away from the market a little bit today. Aaron and Michael were hosting the room, and generally it was just a little more sluggish today. So not great point production, but here's what we do with that information. First thing is we don't make any determination of whether that outcome is good or bad. Actually, Shakespeare said that nothing is either good or bad, but thinking makes it so. So what we're going to do is give you a tool and show you how to use that tool to decide that most any day can be absorbed into your 52-week forecast and give you an idea of where you're going to land at the end of that 52 weeks profit-wise, even when you have a losing day, even when you have more losing days than what you had originally planned on having. Generally, with the adaptive entry system, no matter what time frame you're trading, you're going to have overall positive production. Those are the averages that we want to focus on. So we're going to go to today's data entry, and we are on the 7 to 4 category. That's what our tab down here. We have 2 tabs down here that we're entering this data on. So 7 to 4, and we did 11.5 points. Now with the NASDAQ 100, each point has a $20 value to it. So each point is worth $20. So that's $230 of profit today. But our trading plan has scaled us up to 3 contracts. So we multiply that $230 times 3, and we have $690 of profit today. And we did 16 trades at 3 contracts per trade. So there's 48 contracts that we traded today. All right, so the most important thing after we enter that data, that's the first step. After we enter that data, the most important thing we need to do is to take a look at these numbers up here. We've been through now 13.6 weeks. So 13 and a half weeks of our 52-week plan is now behind us. This number right here represents the number of losing days out of that 13 and a half weeks. So we've had 15 losing days. These two numbers represent the average winning day and the average losing day. So if all of our losses we're averaging 26.17, and all of our winning days are averaging 33.91. Now, on our version of the trading plan, these numbers also take into account the rate or frequency of losing days relative to the number of weeks that are behind us. So there's a calculation in here that just helps us understand if we're losing at a rate of 1 day per week, that has a different value calculation than if we're losing at a rate of 1.5 days per week. Whatever it is, what these two numbers represent for us is an absolute value of the current to-date run rate. So our valuation is that our run rate is 33.91 points per day for winning days and minus 26.17 for losing days. Now, here's the most important thing you do. You plug those numbers into E5 and E6. And we're going to simply put in 33.91, and we're going to put in minus 26.17. And so now what we've done is we've said, going forward, for every day yet to be realized in our 52-week plan, we are going to base our go-forward plan on what our actual run rate is. So our actual run rate, taking into account every winning day and every losing day, taking into account the frequency of losing days relative to the number of weeks, and that will project out for us a potential income valuation. Now we're limiting our maximum number of contracts for our 52-week plan to 3. Back here in July when we started with 1 contract, then we graduated up to 2 contracts, so we've limited now to 3 contracts in total, and I'll talk more about that when we get to the other sheet. So the income forecast is $334,611 if we were to continue at the run rate that we've already established and if we kept our maximum number of contracts at 3. And that's having started with a $5,000 account, and we're committing no more than 10% of the balance of our account at any one time to margin risk, the amount of margin that is required for the number of contracts we're trading. All right, so the other category is trading from 9:30 to noon, taking all signals, and today we lost 38.25 points. So 38.25 times $20 a point, $765, but we're also scaled up to 3 contracts. So that's a loss today of $22.95. And we traded just 7 trades today, 3 contracts a trade, and so 21 contracts. By putting in the number of contracts, it takes into account the fees and commissions, although they're pretty minimal, but it does take into account the fees and commissions associated with trading. All right, so a little different result here when we're trading 9:30 to noon. We have a limited amount of trading time, so if we have some losses early in the morning, we don't have as much time during the day to draw those back to recover those, but this is just a different plan. If this was your plan, because you have the availability to trade 9:30 to noon, this gives you an idea of what you could potentially accomplish. We're through 13.6 weeks. We've had 24 losing days in 13.6 weeks. That rate of loss relative to the number of weeks is factored into our average run rate. The average run rate is 22.58 for winning days and 37.18 for losing days. So we're going to put those numbers in here, 22.58 and minus 37.18. And so now we have told our personal trading plan that going forward, we want our projection to be based on what our actual run rate is. Now, maybe you're somebody who thinks, you know, I'm not doing very well. I've got more losses than I thought I was going to have. I don't have as much point production on my positive days. My negative days are too big. And what happens is you start getting into this spin where you start telling yourself a story, and the story has no basis. It has no basis in terms of 13.6 weeks of underlying run rates. That's really what you want your basis to be on. So yeah, did we lose 38 and a quarter points today? Do we like losing? No, we don't like losing, but let's just plug that in and let's see what that projection is, because we know that going forward, if our run rate is replicated, meaning this may be lower than satisfying run rate of winning days and higher run rate of losing days, if that is your opinion, that you still end up with a 12-month forecast of about $159,000. Okay? I'm not guaranteeing in any way that you are going to achieve that. I'm just saying that if you continue to trade in exactly the same fashion you perhaps have been trading for a 13.6 week period, if your run rates are going to continue to be the same as they have been during that 13.6 week period, then it just becomes a matter of mathematical projection. And that's all it is. And the recycling of the capital, the reusing the same capital day in and day out, you have an account that's growing, you're limiting your risk, your margin risk to no more than 3 contracts, and you can achieve $159,000 of income, potentially, given that those are your run rates. If your run rates increase, become more positive, then that 12-month forecast may increase. If your run rates decrease, meaning they become less positive for you, that run rate or that 12-month forecast may decrease, but still should, at least based on our experience, give you a nice positive outcome. Should. No guarantees of that. It's all based on your personal trading. Again, we're starting with $5,000. We're allocating 10% of that $5,000, or whatever the balance is, to the amount of margin required for the number of contracts we're trading. And since we have this set at 10%, the number of contracts that the personal trading plan will scale up is going to be limited to no more than the number of contracts that would be less than 10% of the balance of the account. Now, I can limit it in a second way. If I don't limit it in level 2, then the number of contracts will scale up without any limitation, only as long as it's below 10% of the balance of the account. And so I can change the number of contracts. I can influence my 12-month income forecast by maybe changing that to 5 contracts. Well, 5 contracts, all that means is that I have to have enough capital in my account so that the margin requirement on 5 contracts is no more than 10% of the balance of my account. That's level 2. That's level 1 risk mitigation, and level 2 is whatever you decide to put in as your maximum number of contracts. So you might think that you are not achieving as much as you would like to if this was your personal plan, and yet you have the ability to influence your outcome to whatever number you desire. Heck, you might be somebody who wants to be ultra conservative and you just trade 2 contracts. You trade no more than 2 contracts going forward, even though you've traded 3 up to this point. That's still $117,747 of potential income, even though you started with $5,000 in the account. This is just a mathematical compounding based on your personal results and personal performance, and it's just absolutely important. It's vital that you have this trading plan and that you use it to help know the answer to the question, when is enough enough? If I know that my $159,000 forecast for a year is based on, getting 22, 23 points of profit today. When I hit 23, 24 points of profit today, I might stop. We have a lot of people in our trading room that said, I'm done for the day. I hit my goal. So it gives you an answer to the question a lot of traders never even know enough to ask, which is, when is enough enough? It also helps to even out some emotions. If you have some really nice winning days, you feel like you're on a streak, and then you have a losing day, it takes a little wind out of you and you feel a little discouraged. It's natural. It's an emotional roller coaster that a lot of traders are on. I always encourage you then to plug your numbers into your trading plan. What is the outcome for 12 months? Does that outcome for 12 months satisfy you? Is it something that you would be delighted with? If the answer is yes, you're doing great. Just keep doing what you're doing. If the answer is no, think about scaling the number of contracts that you are willing to use as your max, knowing that it will never scale to that number until you are, unless it is at least less than 10% of the balance of the account. So we're pretty excited about the whole plan, and the combination of the adaptive entry system and the personal trading plan is, I think, the best summary, or the best combination of tools any trader could want. And here, real quick, and then we'll jump to Q&A. We have so much data in this tracking tool, and Aaron has automated it in so many different ways that it's just a very versatile tool, and we use it frequently in the live trading room. If you were to ask me, and you're welcome to ask tonight if you choose to, if you were to ask me, so I can only trade from 10 to 1 o'clock every day, and I'm willing to take all the signals, I'm going to be heads down, fully focused for 3 hours. Or if you told me, hey, I want to trade from 7 to 9 every day, but then I have a job or I have a business to run, we can help you understand what to expect from those particular time frames and what combination of signals that you may want to trade. And we've built this researching category in here. So, for example, if you wanted to trade only from 7 to 9 every day, and you're willing to trade all signals plus fractals, which is a whole another dynamic, well, for the last 82 trading days, which is when we started building this tool, the last 82 trading days, your average daily profit is $471. $471 a day. Then you have to decide, is that, something that would satisfy me? Now that's per contract, so that's not counting any scale that you would be scaling up in your personal trading plan. That's just a flat per contract value. The two categories that we track in the personal trading plan, the 7 to 4 category is averaging $627 a day per contract. The 9:30 to 12 category is averaging $360 a day per contract. We have an optimum category that we've identified, which is from 7 to 4 all signals. That 7 to 4 all signals, we're not tracking this in a personal trading plan. We're just showing you an example of how to use the plan with the other two categories. But the optimum category, if you really want to immerse yourself in your business, 7 to 4 Eastern time is producing just over $1,300 a day. I can't guarantee that that's what you're going to earn every day. I'm just saying that that has been the average based on real-time production of profits most of the time in our live trading room, hour and 45 minutes or so prior to the live trading room opening. But that's a really strong production, and out of the last 82 days, there have been 8 losing days. We're going to have losing days, we know that. We just like to have as few of them as possible. So combination of the fixed data as well as the research data here, where we can help you understand when is the optimum time for you to be working your personal trading business. That's what we're here for. We want to help you as much as possible. So let's jump into Q&A. Michael and Aaron.
Jim is asking, Aaron has mentioned that she did a video illustrating Infinity's dome. Where do I find such a video? So Mark had done that last week. It's at newscycletrading.com/education. And at the very bottom of the page are the two dome videos that we did with the Infinity Dome, which is just specific to what we look for locking in profit, how we set our bracket orders. Mark even took time to go over the trailing stop setting as well, if you wanted to do that. And then Infinity has their own website as well with tutorials on their videos. They have it, I believe it's under their education section as well. So that's available on Infinity's website. Theirs is a little bit more basic, how to place an order. Mark does a great overall summary of what you would need to know to place orders with AES on the Infinity Dome. And I'll send you the link too, just so you can click on them as well.
Paul's asking, currently it looks like the 7 to 4 yields 20% down days, and the 7 to noon looks like 35% down days, correct?
7 to noon. Let me see here. Do I have that? Yeah, 7 to noon. Yeah, well, we have 11 days, 11 losing days, and the 7 to noon. So I didn't actually calculate that.
13% out of 82 days.
Yeah, 11 losing days. And in the 7 to 4, I think you asked about, is 8 losing days.
Which is 9.7%.
Thanks, Aaron. The win-loss ratio that we show here is based on the individual trades within the days, not the day itself. The win-loss ratio is based on all of the individual trades. Not sure where you're getting 20 and 35%. But Aaron just gave you the real numbers. I can't emphasize enough. This is my personal opinion. I mean, we make the personal trading plan available. You know, we work with New Cycle Trading to make the adaptive entry system available. I just can't emphasize enough that those are the two most important tools any trader should have. I just don't know, now that I've worked with them both so extensively, how you could trade without them. One is telling you when to take a trade, when to exit a trade. You're going to have winning trades, you're going to have losing trades, but our win rate is somewhere around the mid 70% range in terms of win-loss ratio. So this is the most important market metrics tool you're going to ever want to have. It also is ultra simple. I've looked at so many different charts. I mean, it's just bizarre sometimes, the number of indicators that some people will put on their charts. There's no way they are able to actually interpret that quickly. What I love about the design of the adaptive entry system is Craig and his team basically said, we're going to put all the complexity of all the alignment and all the algorithms of whatever indicators are being reviewed and looked at and paired with other indicators. We'll put all that behind the scenes, and we're going to present to the trader one simple single signal entry. I had to say that very slowly. I can't say that very quickly. A single signal entry. And it's just simply go long when you see green vertical shading and go short when you see red vertical shading. Now, all of those of you who are familiar with adaptive entry system already know what all these labels are. They identify the 4 different methods of entering a position within the AES system. But basically, if you're trading all the signals, you're just looking for green long and red short. And that's true whether you're trading futures or perhaps you're trading options. You know, perhaps you're someone who would prefer to trade options on Amazon. And in that case, we're trading a 5-minute chart for futures on NQ. You might want to trade a 10 or 30-minute chart for options on Amazon or Booking or Google. These are stocks that are part of our watch list. But just as an example, I'm just pulling up stocks here today. Here's a signal to go long, a green shaded signal to simply go long on Amazon. And that was at 11 o'clock this morning. The open of that bar was 3,157. I'm just going to round off, 3,157. And nothing the rest of the day actually told you to get out of that trade. Now you might have exited it at the end of the day. Just take it off, take off the overnight risk, but it went up to $3,193. So 3,157. Sorry, it went to a high of 3,200. I was looking at the open of the bar. Went to a high of 3,200. So you've got 43 points of profit. You've got 43 points of value change in the underlying stock. If you're trading an at the money 50 delta option, there's $21, $22 of profit on your option between 11 o'clock and say 3:30 today. So that's pretty reasonable per contract. You know, it's 100 shares per contract. If you got $20 of profit, you got $2,000 of profit just simply by taking that one signal. You could look at most any stock you want to and see the same type of signals. Here's a signal to go short on a 30-minute chart on Google. Here's a daily chart on Google. Here's a signal to go short on Google, and you can see what happened on that. Here's a signal to go long on the daily chart on Google. My point isn't to show you every single trade here. My point is to highlight for you that the adaptive entry system is truly adaptive to whatever stock you want to trade, whatever option index you want to trade, whichever ETF you want to trade, or whichever future you want to trade. The signals are exactly the same. You go long on a green highlight, you go short on a red highlight.
We have a question here from Perry. As a brand new subscriber following the signals on AES, I'm experiencing difficulty in achieving your price using the DOM as well as locking in. It sees that I'm consistently late or have an inordinate amount of slippage.
Yeah, so Perry, I think that just comes with experience. We get the question frequently about slippage. It really just comes with experience in using the Infinity DOM. And also, when the market is moving rapidly, slippage is just part of the equation. We mentioned slippage in our trading. If you had slippage, you know, here's a trade that we locked in 5 points off the open of the bar, but if you had slippage, you know, it moved another 12 points, so here's an opportunity for you to lock in 5 points also. So in the futures trading curriculum, we talk about slippage and how to adjust to that during live trading, but a lot of it just comes from experience with the DOM and how to get comfortable with an immediate click, an immediate interpretation of the signal, and then executing the trade. Michael and Aaron and I will be trading all together and each taking the same trade, and we will sometimes compare notes. You know, I might have had a point of slippage, Michael might have had a half a point of favorable slippage, because not all slippage is unfavorable. Aaron might have been filled right at the open of the bar. A lot of it just depends on how rapidly the market is moving and how quickly you execute the trade. So I would say, based on the nature of your question, that it's really just it boils down to gaining a bit more of experience.
And I know we had quite a few people mention this last week, that it was helpful as I went through with them, and we showed this on, I think it was the second video on the DOM, I believe. Well, what I'm talking about is prepping for the signal. We use the lower indicators. If you don't mind, Mark, switching to a chart. No, that's fine.
There you go.
So I am always prepping for what I think is going to be the next signal. Current bar is a great example. It's a red bar. If that bar, well, it turned, but it was red. And if that bar closes red and the next bar opens red, the price bar, it's going to be a short trend bias entry. So the action that I take on the Infinity DOM is for a potential short entry, is I scroll the DOM so that the current price level is all the way at the top, maybe a little bit off the DOM. And a few seconds right before the print of the next bar, my cursor's hovering over that sell market button. And then that way, if that short entry comes on at the beginning of the bar, I'm ready to click. And honestly, if it's a trend bias entry, if that I'm leaning for, most of these, it's going to be pretty clear of what entry it's going to be. I would say about 90% of the signals, either using the lower indicators or evaluating what the colored price bar is for trend bias. If I see a flash on the alert log, I don't have to read anything. I don't have to necessarily know what signal it is for sure. I know there's a possibility we could have a trend bias signal and it's looking very clear that that's going to be our signal. As soon as I see anything highlight on the alert log, because that's what happens on the alert log when an alert fires, it highlights, or I see a highlight on the actual price bar, I'm clicking that button. And that gets me in pretty close to the open of the bar, sometimes right at, sometimes a second later. And so because of that, I'm minimizing any slippage there with having to process what, okay, I don't know what's coming up. Oh, it's a short trend bias. Oh, okay, so I should click sell market. Oh, I forgot to uncheck auto center at the bottom. Okay, now I need to scroll to get to the 5-point profit target. All of that is eliminated for me because by scrolling my dome prior to the signal to have the current price be at the top of my dome for a short position or the bottom of my dome for a long position, my dome tends to span about 10 points, and that allows me to just move the mouse right about to the middle of the dome to be able to lock in the 5 points a profit. And so that reduces the lag time for getting into the position and also for locking in at the 5-point profit.
Mark, if I can piggyback on that, you said something really interesting today, and I think it's worth mentioning. But if you've got multiple screens and you're working on screen one, and then you go to screen two, and that's where your dome is, and you hit sell or buy, you have to click it twice because it doesn't know you're on that screen. So that 1 or 2 seconds can be 3 or 4 points easy in this moving
Exactly.
market. So that was a great point you made today.
And I'm going to piggyback off of what Michael said just there. So if you have your dome on one screen and your chart on the other screen, which is actually my current setup right now, only because I'm showing my charts in the live trading room and I want them to be full screen and I don't want them to be shrunk down in order to show my dome next to them, because then the people in the live trading room will have a little bit of a smaller screen that they're looking at. So I actually have my dome on a separate computer right now. I don't look at the dome when the entry comes on. I don't waste that time of seeing the entry on one computer screen and looking to the dome on the second computer screen because I'm already set up to go short or go long. That cursor is sitting at the buy market or the sell market button. So if I see it on the chart, I just click because I already know where the cursor is on the dome. And then as I'm clicking, I'm going over and looking at the dome to lock in that 5 points if it's moved.
Yeah, we're all talking about very fine refinements of entering the trade because we're trading off of a 5-minute chart on what is an index, a futures index that can be very rapidly moving. If you're not trading with the Infinity Dome, I'm not sure, I'm going to make a bold statement and it's not going to be accurate probably, but I would just say you probably are at a disadvantage. And that's just because I'm not familiar with every other platform available out there. I just know that with the Infinity Dome, it's one click and I'm immediately in the trade. And with NQ in particular, we have trades where we can't even finish telling you the trade and we're already out of the trade for a 10-point profit. It's moved that quickly. So these are all little fine tunings. Michael mentioned one, Aaron's mentioning, how to get yourself prepped. And the way the adaptive entry system signals present themselves, we can reasonably anticipate what might be coming up. So we can anticipate what we might want to do on our dome.
And I think that's the most important part because otherwise every signal, every entry is a surprise. And that's going to cause a delay. And these signals, when they come on, a lot of the time they're moving instantly. That's the best part about the adaptive entry system. I get annoyed when I'm in a trade for 2 minutes.
Oh yeah, I know you were today.
That's true because most of the time these signals come on and we move.
So I wanted to just share with you here, I don't have my dome open tonight, but this is the way my screen will look when I'm trading. When I'm trading NQ, this is how much screen space is taking up, and this space over here is my dome. So I'm just simply looking at the trade waiting for the countdown clock to tell me when the next signal comes on. By the way, we just had a long trend bias and consensus signal come on. We knew that was highly likely, so we would have been prepared. Like Erin said, she would have had her dome adjusted, anticipating a long signal. We knew it was going to be a long signal. We just had to wait for the bar to open. And as soon as that bar opens, we click and we enter the trade. But I have then my mouse over here. This is my fictitious dome over here. I'd have my mouse over here. And as soon as that signal comes on, I'm just clicking one button. And it's going to enter the trade. It's going to enter a 10-point profit target for me and simultaneously enter a 20-point protective stop, all with one click, which is one of the reasons why I absolutely love the Infinity Trading Dome.
And that's why also in the live trading room every day, we're going through and saying, okay, this is what can happen of possible entry at the beginning of the next bar. So let's say we were back in time 5 minutes. I would be talking about, okay, we have 2 gray oscillator bars above the 0 line. We already have a green AO, Cycle Finder Plus is crossed up. As long as, and we have a blue price bar, as long as that all stays the same and we get a blue oscillator on the next bar, we're going to have a long consensus entry. And we'll also have a long trend bias because it'll be the second blue bar. And that's exactly what came on at the beginning of this bar, was a long consensus and a long trend bias entry. So we take the time, I'd say for about 90% of the signals. There are times where we maybe get a little bit distracted. Calling out the signals all day from 8:45 to 4 can be, it's a little hard to be on top of it every 5 minutes, but generally we're in there saying, okay, these are the possibilities. And if we don't know, we're honest. We're, okay, there's a few possibilities. One could be short, one could be long. And I talk about keeping the price in the middle of the dome and keeping your cursor in between the buy and the sell market until it looks like one has a higher weight of happening than the other. But the benefit of being in the live trading room is that every signal we're talking about, okay, these are the possibilities, or this is the possibility for a long or short entry.
Mark, Virgil's asking, please explain what the full cycle is.
Sure. Let's go to the detail. So one of the things that we track is on trend bias trades, which can be a trend bias trade. It can be a combination. I don't think we had any today, did we? Trend and continuation. Oh yeah, here we go. Back at 5:55 this morning. Anything that is a trend trade defined by the adaptive entry system. We're tracking what we actually did on that, and then we're also tracking, well, what would happen if somebody was holding for 30 points, not 10 points? What happens if somebody was holding for 20 points? And what happens if they held for the full cycle? So the full cycle, when we talk about the adaptive entry system, is, for example, this long trend bias trade that came on at 1240 today to go long. So we would have gotten into that. And if you're trading and holding for the full cycle, you would not have exited out of that trade until this white bar opened right here. So that's the full cycle right there. In that case, you'd be long at 436, I'm rounding off, and you'd be out at 490. Nice trade, really nice trade, 54 points. So we track that, and we don't talk as much about the full cycle because as we really developed our awareness of the averages, we realized that it is probably the most emotionally taxing category. I'll put it that way. If I was to hold for the full cycle and I traded the trend bias and continuation trades from 7 to 4, out of 82 days, I've had 29 losing days. So it's the highest number of losing days. It's the lowest win-loss ratio, 33.8%, which means that you're going to kind of slug your way through 66, 67% of your trades being losing trades. and that can be very taxing emotionally. However, the overall daily profit production is 927 points. How can that be? Well, it's because when you're looking at, see, is it on the daily summary, Aaron? Should be.
Yes, you just have to scroll
All right, where is, let's see, how far do I have to go?
to the, now back to the right. There you go, TV Plus.
TV Plus right here. So you can look at these and you can see, well, geez, the reason somebody would choose to do that is here was a 38 point winning day. Here was a 280 point winning day. What you're going to do is you're going to catch a lot of the big trends, the big runs. And that is exciting to some folks. But you're also going to incur a lot of losses. You're going to have 102 point losing day, 92 point losing day. We saw all this. So we still track it. And I think it's important information. And there's nothing wrong at all with trading that. It's just that I think it has a very heavy emotional toll. And if I was going to trade from 7 to 4 and make that commitment, why don't I want to go after a category that's going to give me over $1,300 of average? I only have 8 losing days that I have to kind of figure out how to deal with emotionally, and almost 74% of my trades are going to be winning trades. So what we're doing here, Virgo, is we are tracking as much data as we possibly can, so that we're not deciding for you. We're not building a profile for you that says this is what you should trade and how you should trade. No, we are asking you, what hours of the day would you like to trade? And what are you comfortable trading? All signals, trend bias, momentum only. And then we can help guide you to what to expect as an outcome from that time frame as well as those signals.
Can you pull up your trading plan? Thank you. Perry's asking, how does your initial 20-point win-loss target stop at the top of the personal trading plan influence the projected outcome? So I think what you're seeing is the $20 per point, which is customized based on what you're trading. And for NQ, each point on NQ is worth $20. But if instead, let's say you were using your personal trading plan to trade ES, you could change that to $50 a point, and it's going to change the average point calculations for you. I believe that's what you're asking, and if I interpreted your question wrong, just let me know.
Paul's asking, is there a separate service to get text alerts? We do not currently have an alert service, Paul. We've had alert services in the past. They were all built around options trading. We don't see that we would have a alert service anytime in the future anytime in the near future for futures trading, just because of how rapid fire some of these trades are. We could be in and out of the trade before you would ever get the alert. But regarding options trading, it's always a discussion that we have ongoing about what's the most effective way for us to help people who can't monitor their market and the charts all day. But we don't currently have an alert service.
Perry's asking, could you do a video on the anticipating of the signals?
You're asking, oh, what Aaron was describing in the way we anticipate the signals? I think that that's something that you probably more effectively learn by experiencing it in the live trading room over a period of a few days, even just for a week. I think that a single video focusing on anticipating the signals coming would not comprehend all the different variables that we like to consider when we are looking at what may possibly be the next signal coming up. But
I
in
would
real
agree.
time,
There's a lot of
we're able to
different,
see that.
there's a lot of different possibilities for each potential signal. that it's easier to cover in real time as we're trading through through the live trading room. Perry's saying, I have a challenge that I'm trouble getting entry and exit prices recorded so that I can enter them correctly into my personal trading plan. So if you're using the personal trading plan, it's using your end of day results.
Yeah, end of day results. We're using this tool that we built, that Aaron built for us, that is continuing to be evolved, and eventually we may try to make it available to our community, but it's not ready yet. But this is what we're using. So we're tracking every single trade, the detail of every single trade in this. You can, if you're familiar with Excel, you can set up a simple spreadsheet to track your data. If you want the individual trade detail, you can do it on a legal pad, whatever. But the trading plan itself just enters one single data point at the end of the day, 2 data points, the profit or loss for the day and the number of contracts that you traded. And on the Infinity Trading Dome, that's in the lower right-hand corner of the dome. It tells you at any given point throughout the day whether you're positive $600, you're down $200, and then at the end of the day, you take that information and plug it into the trading plan. So trading plan's not designed to be used for the individual trade detail.
And we have it allowing you to put in your commission rate and everything, so you can take your gross number right off the Infinity Dome, put the amount of trades that you placed with your contracts, and then it would calculate your net for that day.
That's right, Barry. End of day results right off of the trade history, wherever you're trading. It's another reason I love the Trading Dome with Infinity. Just it's one single number, lower right-hand corner.
And saying, I noticed that in the live trading room, some signaled trades you elect not to take. How do you filter these trades? We essentially take every signal. There are 2 to 3 exceptions to that. The first exception would be if we're already in a trade, we're not going to double down on the trade. So if we're already in a long trend bias and it hasn't hit our 5 points or 10 points or 20-point stop, and on the next bar a long consensus comes on, we're not going to enter the long consensus because we're already long on the trend bias. So that can be interpreted as skipping a signal. The other one would be with momentums, which are counter trend. So if we're long on a trend bias, and again, it hasn't hit our profit or stop loss yet, and then a short momentum comes on, we generally don't abandon a long trend bias trade for a short momentum. And then the third one, go ahead. Yeah. You go.
Well, I want to see what your third one is.
The third one would be in times of extreme volatility.
Ah, yes, that was my first.
Where the dome is in what I would consider a safe trading place, where the slippage could easily be 8 points because something chaotic in the news came out. It essentially happened, it was yesterday, right? Where the series of tweets caused that
286-point sell-off.
Yes, exactly.
But that said, we will advise some caution. So let's just say the first bar of the day is a 70-point bar, and the next bar is a trend bias to go short. We actually record the results of that trade because we're building a database here that will help us understand the entire range of trading activity. But we will frequently caution, you may want to hesitate, or you may want to skip this based on the size of the first bar. We're not skipping the trade ourselves technically. We are advising based on the size of the bar, that volatility, that you may want to just give some thought to that. So
There
Hope
is
that
a
answers
fourth
your
one.
question.
We don't enter anything after 3 seconds into the bar. So that would be another, that could be interpreted that we're skipping the trade. As long as the signal comes on within the first 3 seconds, we're in that trade. But if it comes on mid-bar, so anything 4 seconds and on, we're not going to take that signal. Now I think I'm done.
Well, and then we decide at the latest 3:30 that we stop taking trades, we stop recording trades. And some days, just based on where we are in terms of overall performance and what we're seeing in the market, we may stop as early as 3 o'clock. I think we actually had one Friday that we just had so much positive point production, and it just, realistically, I know we're building a database here, but realistically, if you're a trader and you're up 120 points, having taken all the signals and it's 2:30 in the afternoon on a Friday, you probably want to quit. So I think we had one day that we closed a little earlier than 3.
Me and Aaron's wanting to close about noon, but anyway, we'll talk about that later.
Well, you
I-
guys could
yeah.
get a little more production.
We were looking at the overall performance, Michael, the adaptive entry system yesterday from, I think it was 1 o'clock to 3 o'clock, and it had, I think it was around 300. I don't remember the exact number, but it was around $300 of profit a day. And so I was trying to convince Mark to let me just work that amount of time.
That'll work out. I'm all for that. Gary's asking on my personal trading plan, the upper left CD cells, weeks, and points average aren't the same as Mark. Is that an update?
Yeah, Mark had been calculating that manually, and so I added it on for him so he didn't have to use the
Right.
calculator to constantly calculate those values.
But it's a update that we're going to provide in the near future for people who have the trading plan. We'll let you know when we have that done and we're ready to release that.
Let's see. Dean's asking, Aaron, why not when the signal is in the middle of the bar?
So that means that something happened on that price bar. Price action moved on that price bar enough to align the signals mid-bar. And a lot of the time, the price has already moved the 5 or even 10 points of profit that we normally look for by the time that signal came on. There are plenty of signals throughout the market day that we like to filter them with the amount, what is it, average trades. So all signals 7 to 4 is 28 trades a day. Even the 9:30 to noon has about 9 to 10 trades a day. If you want to up your trades, you could evaluate taking it mid-trade, but a lot of the time what's happened, or what I feel, I don't have any concrete research on this, because again, we have plenty of trades throughout the day, so we're looking to narrow down the best of the best, which are happening at the beginning of the bar. But I feel sometimes if we're getting that short momentum in the middle of the bar, we have that short momentum come on, we hit that low, and then we bounce off of that. We don't have as much of that follow through. So we like to limit it just to really the beginning of the bar.
Yeah, you don't need to trade more, in my opinion. If you're trading from 7 to 4, I'll just use that time frame as an example, and you're knocking down $1,300 a day, and you're averaging 28 trades a day, do you really need more? First of all, every time you put a trade out there, you incur risk. Every time you add more trades, you add more risk. Our averages are telling us what you can accomplish with 28 trades. Frankly, if you're averaging, if this category is averaging $1,300 a day, but you could quit at 1 o'clock and be averaging $1,000 a day or $900 a day, you might want to quit there. It's entirely up to you, but we don't believe you need to add more trades to the equation. That's our belief.
And Craig could probably phrase this a lot better, but majority of indicators out there are either using a combination of or all of the open, high, low, close of the bar. So when we're entering at the open of the bar, we don't have the high and the low and the close of the current bar affecting that entry of the signal. But if you're entering mid-bar, whatever it's done on that current bar has affected those numbers and those indicators enough to give you that entry. And so for us, that's not a valid entry.
Yeah, so here's a great example of this tool that Aaron built. It's talking about the $1,300 a day, 28 trades, and that's from 7 to 4. Well, 7 to 1 is $1,100 a day, averaging 24 trades. You just have to decide what your goal is and decide what you want to do. You could trade 3 hours a day less and make $175 a day average less. It's just, these are all averages. So what you achieve in your own personal trading is going to be slightly different, depends on all sorts of things, how quick you are to take the trade, how attentive you are, et cetera, et cetera. And these are all based on an average of 82 days under our belt, 82 trading days under our belt, and gives you a guideline, though, as to what you could potentially accomplish.
Paul's asking, is there a best practice list of alerts that everybody should be using, like Wake Up?
All of the adaptive entry system is my opinion.
Yeah, you should have alerts, I think, for every signal, consensus, momentum, trend.
You won't know if it's really valid if it comes on like 5 seconds after. That's
Right.
why you got to make sure. I know Aaron, I don't know about the way I look at it. I look at the alert log when it's about to kick over, for the next time, because sometimes that will get you in, keep you from taking a false signal. I say false, I mean past the time, you know what I'm saying?
Well, here's a great example right here. You see this continuation trade flashing on and off. I'm not even giving a second thought because that didn't come on. I can tell by the alert log that didn't come on until 8:01 and 52 seconds. Well, that's on the 8 o'clock bar.
Run, how much did it run, Mark, from the opening? See, because you're chasing I call it chasing the rabbit. So,
yeah, you just don't know where you should get in.
Right.
The impulse that triggered that signal may have already moved the price. You just don't know. And again, you don't need more trades, in my opinion.
And so, Paul, if you're trading all of the adaptive entry system signals, I would personally have all of the alerts that are available for AES set. Wake Up is completely up to you. The Wake Up alert notifies you X amount of seconds before the next bar. It defaults to 30 seconds, and you can use the alert program through TradingView to have it register a sound. So that way, especially if you're Mark, Michael, or I, who are obviously also running things at Options Moneymaker at the same time as running the live trading room, it allows, at least in my case, me to update a spreadsheet or answer an email and then be notified that the next bar is going to print in 30 seconds so I can evaluate, well, what signal does it look like it's going to set up for and get my dome ready to place the entry.
Let's see, Steve's asking if one is interested in trading between 8 and 12 Central each day and only take the trend bias plus trades, what would be the potential?
So you want the trend and trend bias, okay.
It's the last one, I believe, or keep going down. Nope, I was wrong. Oh, trend bias includes the trend bias plus trades, so it's just
right here.
Trend bias plus, yeah.
Yeah, okay. That includes the trend bias plus.
No, that one's not a continuation. That's what you mean by TB plus is continuation, I'm assuming.
Continuation.
So it's just the normal TB plus 10.
But not fractals.
Correct. That one.
Right here, okay. And what time do we want?
Central, so it'd be 9 to 1 would be our time. There you go.
9-to-1 trend bias and continuation trades only is averaging for the last 82 days, $280.55 a day, 20 losing days during that time frame. You're going to have about 6 trades a day during that time frame for just that signal category.
And can you add fractals to that?
Yeah, I see that. This one, Aaron?
Yes.
And that's $400 a day, 17 losing days, about 9 trades a day, 77% win-loss ratio for the individual trades. Yeah, Perry, all the questions that are presented to us are answered here verbally. They're answered live. And within the Zoom tool, we clear the questions off of the chat window here. And the simplest way for us to do that is we just send an asterisk and you'll get a message that your question has been answered live. If we send a private response, then you'll see chat text with a separate private response. But the entire session is recorded, and you get a copy of that recording most likely tomorrow. Appreciate you saying that, Perry. Perry's just saying my compliments on the development of this product and the personal trading plan. Probably your best, most comprehensive ever, also easy to follow.
And Aaron and Michael are
you saying
great.
that.
Yeah, and Aaron and
Yeah.
Michael are great. Thank you, Perry. Appreciate that.
I was going to add that.
Okay.
Even though he didn't say it, I was going to add
Okay.
that. I was going to say Michael and Aaron.
Oh my! I said Aaron first. Aaron, you heard me.
Yes.
Okay. Thank you.
I'm not sure what Michael's asking.
To see if you could set another chart up that would trigger at 4 minutes and 58 seconds, for example, versus the 5 minutes.
Okay. It sounds more complicated than what we want to present here, Michael. And I know you are a very actively engaged trader. I have so much respect for you and the way you do that. But what we are trying to do here, what our strongest desire is to present a system that is not overwhelmingly complicated for somebody to learn. You got to invest a little bit of time in learning it. You got to invest a little money in learning, but that's your commitment to trading. But I applaud Craig and the New Cycle Trading folks for building a system that really is as simple as I don't need to know all of the different dynamics behind the consensus signal. What I know is green shadow long, green shading long, and I go long on my dome. We've tried to make this ultra simple. And what gives me the greatest satisfaction is when we're just kind of getting started for the day, or it's about mid-morning and we get more and more people sending us messages and say, I've looked at my trading plan, I've made my goal for the day, I'm done. And a lot of people just, they leave, they go walk their dog, they go surfing, they go flying, they go do whatever people love to do, play golf, swim, whatever. And a lot of people will stay but shift to sim mode because they're continuing to learn and develop their skill set. But they're not going to put their live money at risk when they've met their plan and they know what their plan is based on the personal trading plan. I just think it's a great combination.
Let's see. Dean's asking, sorry, I missed the explanation of the 10-point in all signals. 10.
So
what?
he's asking about
Okay.
on the tracking spreadsheet, it says 10 points. It means that we're locking in or excuse me, let me try that again. Our profit target is 10 signals. So it says all and then signals 10 points. That means that what we're tracking is a 10-point profit target. And that's what our brackets are. Every single trade we place and I'll tie into Paul's question, including fractals, are using the same exact bracket order with a 20-point stop, 10-point profit target, and then once the position gets a profit over 5 points, we insert a manual stop to lock in that 5-point profit target.
Steve asked about one other combination, all signals including fractals from 9 to 1. That's exactly what we have. No, that is not correct, sorry. All signals, that's the right one, Aaron? All plus F.
Yes.
9 to 1 is averaging over an 82-day period, $691 a day, 14 losing days. You do about 17 trades on an average.
And then Paul, let me make sure I'm completely answering your question. I reread it there too. And so how would you trade the fractals in addition? So to trade fractals, what you're looking at is on the chart there. Mark, can you switch to the chart, please? They're the green inverted V's and the red V's. And what a fractal is, it's the highest or the lowest point in a 5-point bar period, and it has to be the middle bar, has to be the highest high or the lowest low in that 5-point bar period. So the one he's pointing out right now, the two prior bars have higher lows, and the two bars afterwards also have higher lows. So that's a lower fractal. And if you wanted to trade that, you place an order to go short at the low of the bar, which is 11,481. And when price breaks that, then you'd be short at that. And if you're using the Infinity Dome with auto checked, then your bracket order would automatically be sent once you enter that trade. Now, there will be fractals that happen while there are adaptive entry signals that are currently in play, that you're currently in. So if you are wanting to trade fractals in addition to the adaptive entry system, as always, we recommend that you start in Sim first, because you can be long on a consensus and not have it hit your 5 points yet, and also break an upper fractal. And so if you have an order out there to go long, you'll be doubling your contract. So if you're in the consensus signal of one contract and then we break a fractal and you have the order out there, now you'll be long 2 contract, one at the entry of the consensus signal and one at the entry of the upper fractal. And so it takes a little bit more management to place your stops and what action you choose to take from there, whether you just default to locking in based on the fractal or the consensus signal, or if you try to lock in 5 points on both, that's up to you. But there is a possible, and I will tell you it happens quite frequently throughout the market day, where you will be in then a fractal trade and an adaptive entry system trade. So that needs to be determined if that's the right decision for you and your account.
Okay, I don't see more questions out there.
No, we're going to go ahead and close down. Appreciate you all being here. Appreciate you being part of our community and allowing us the privilege of helping you learn to build your personal trading business. Again, I think that the combination of the adaptive entry system and the personal trading plan are the two most critical ongoing tools. And then you have to choose what kind of trading education is right for you. Options trading education, futures trading education. Certainly the live trading room is the best source of ongoing learning every single day for no matter how long you want to trade during the day. And I'm very blessed to have an amazing team with Michael and Aaron. And they do a great job of not only identifying signals and just helping you recognize them, but teaching throughout the day. So that's what we're here for. And we look forward to seeing you go. Yes, yeah,
okay?
Go ahead. Yeah.
There's a question asked here asking, do you use Thinkorswim instead of TradingView? And so I think this is a good opportunity to be very clear on what we use. TradingView is our charting system that we use, and then it's because New Cycle Trading, their indicators are available only on TradingView. TradingView is what we use just for charts. We don't trade on TradingView. We are just using them for the adaptive entry system, which is New Cycle Trading. That's who they have decided to place their indicators on, as TradingView. It's very easy for custom indicators through TradingView. TradingView is web-based, another benefit. They also have an app as well. So we use TradingView simply for charts. You can trade through TradingView. We don't recommend it. So we are only using TradingView for charts. That's for Mark, Michael, and I. That's how we trade. And then we are placing our actual trades on the Infinity platform. We use Infinity specifically for trading. We don't use their charts because we're using TradingView charts, but we're using Infinity to trade and TradingView to see when to enter those trades on Infinity.
We're using Infinity for futures trades, but when we do trade options, we're using
Yes.
E-Trade. So the question about using Thinkorswim, I don't know if you're considering trading futures with them, but you want to explore very thoughtfully what the margin requirements are for any broker that you're considering trading futures with. We like Infinity because in order for me to trade one contract of the NASDAQ 100 index, it requires $500 of margin. There are other brokers, and I'm not going to go through and itemize them, just do your own research, but there are other brokers that for that same one contract, it's a $17,000 margin. That makes a huge difference when I'm looking at my trading plan and I want to scale up to 5 contracts. For me, 5 contracts would be $2,500 of margin. For someone else, that could be, what is that, $85,000 for 5 contracts? That's a huge, huge, huge difference. On my trading plan, I showed you what the forecast is and what could potentially be the outcome, starting with $5,000. At those other brokers, I got to have probably $20,000 in the account to even play in the game. So ask questions thoughtfully and make sure you choose your broker wisely. We like Infinity Futures. We recommend Infinity Futures. We get nothing from that relationship other than the satisfaction of being able to help people succeed in trading.
And there's no link between Infinity Futures and TradingView. So you can use whichever broker you want. As Mark was saying, Paul's saying you're not allowed to use third-party charts. Thinkorswim has no control over what web page you're accessing while you're trading with them. There's no integration between TradingView and Infinity, and so there wouldn't be any integration between TradingView and Thinkorswim either. You would have your TradingView charts open in a web browser, and then you would have your Thinkorswim trading platform open.
All right, Michael, Aaron, thank you so much. And folks, we're going to go ahead and close out now, and we'll be back for another day of trading tomorrow. Thanks, everybody.